Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all you guys are doing very well today and had a great day of trading too. The reason I'm chuckling a little bit is because we're finally here, guys. It is finally the night of the election, which is going to be one thing for the markets that they will appreciate, which is removing an uncertainty catalyst. Regardless of the outcome of the election and who wins, it doesn't really matter for the markets. All the markets care about, for the most part, other than a few niche trade sectors here and there, of course, depending on the candidate that wins, the one thing that the market really wants is to remove uncertainty catalysts. Now, we came into last week removing a bunch of uncertainty catalysts. We got tons of macro data. The economy was still healthy. The jobs market, although displaying a few red flags here and there, wasn't showing any significant red flags. And last week as well, we once again saw that inflation was indeed well under control. So we only have two remaining uncertainty catalysts for the week, guys. Number one is tonight, the elections, of course. And then number two is Jerome Powell coming out on the Thursday session with an interest rate decision. So in today's markets, guys, we actually had a bit of a nice green day. The biggest green day in the last 2 weeks worth of trading. And the overall market was broad, very, very nice broad market performance from a lot of your major sectors. So in today's video, guys, we're going to do a few things together. Number one, we are going to give a little bit of the expectations into the election in terms of what does the market usually do after the election is over. Number two, I'll be presenting you with a little bit of thematic trades, depending on whether former President Trump wins or whether Vice President Kamala Harris wins. I'll give you guys the niche narrative trades that may be favorable depending on which candidate could win tonight. And of course, guys, thereafter, we're going to go through one earnings report that I have prepared for you. It is going to be a big one, guys. SMCI. We're going to cover their earnings and see exactly what's happening with the company that's been suffering a lot in the last 3-4 weeks, ever since being dropped by their auditor, Ernst & Young. And thereafter, guys, we're going to, of course, go through our major technical analysis rundown of our major market indexes, see how we're shaping up into tonight's election, and go through our big tech name list as well, see if there's any good opportunities to be had tomorrow morning after we are through most of the uncertainty. And lastly, conclude with a quick glimpse into my portfolio for a few of the positions that I am maintaining into tomorrow and for the rest of the week. So a lot to cover today, guys. Let's jump right into the action. So SPY up about 1.21%, QQQ up 1.28%, pretty much the biggest green day that we've had in the last 2 weeks off of both of these major indexes. So very nice to see the bulls coming alive and creating a little bit of space between us and those nasty lows. Take a look at the heat map right here. Well, you can't because I just closed it. So let me just open it back up. Hit the wrong button, guys. So here you go. Here's the heat map. Heat map looking very good. Broad market performance, guys. The market really coming back, giving us some space, alleviating a little bit of that fear that we've been having coming into this election cycle. So nice to see some very broad market performance led to the upside mostly by big tech and semiconductors having one of their best days in the last 2 weeks of trade as well. Take a look on the one-day relative, guys. You'll see that everything was pretty much in the green, led to the upside surprisingly by utilities, but all the major sectors in the green. On the 1 week relative, however, we remain fairly mixed. Some winners, some losers. The biggest winners, energy, consumer cyclicals, industrials, and defensives. And to the downside, the biggest loser is still technology. But the three major sectors, guys, are still in a decline week over week. Talking about technology, financials, and healthcare, the three most important sectors of the S&P 500. So we will see if by tomorrow, after removing some uncertainty catalysts, can we get through this pain that we've currently been having, right? Now, before we get into the earnings for SMCI, let's go through a little bit of an expectation as to what the markets usually do after an election cycle has been completed. So here I've compiled a couple of charts for you guys. So number one is going to be the seasonal factor, right? Where do we stand in terms of November and December in a year where we have a presidential election? You will notice that November is usually a good month for the markets. 58% of the time we are actually up month on the month. And in December, you have a very high probability of being up, the highest of all the year, as a matter of fact. 83% of the time the markets have been green. Now, of course, this is not to say that 100% of the time they've been green, but the odds are definitely in our favor to continue a possible end-of-year rally. And normally in a non-election year, these odds are the same. November and December are known to be some of the best months for the market as a whole. Now, where do we stand very shortly after the election? Well, as you can see right here, I've compiled the data from the last, let's say, 6 different election cycles. And as we can see, here's the days before and after presidential elections. So we see very tumultuous in the 20 days leading up to the into the election, right? Mostly has been down, and that's been a byproduct of what's been happening too over the past 2 weeks in the S&P. We have been slightly struggling and netly down as a whole. So far the price action is in line with this chart. And then as we get out of the election cycle and we remove that uncertainty catalyst, well, there's only 1 year where in the first 10 days we were actually negative, and that was the 2012 presidential election. All the other 5 different cycles, guys, as soon as the election is over, we tend to see some increases in the markets, and the increases usually get more substantial after that 10-day mark. So I do believe that moving into tomorrow and possibly into the next week and a half of trading, unless something very crazy happens, such as a contested election, or maybe we have a few swing states that still remain undecided through the Wednesday session, all the way maybe even through Friday, Pennsylvania, Wisconsin, Iowa, places like that, well, then of course you will have to delay this timetable a little bit. So that is going to be the worst case scenario, but usually on average, we do tend to go up after the election cycle in the first roughly 2 weeks of trading, and then supposedly going to have a decent November and December as well. So keep in mind, they're not 100% probabilities, guys, but the odds definitely are in our favor right now. So let's move into some of the thematic trades, shall we? So where do we stand whether or not, depending on which candidate could win the presidential election, right? Well, I have a few niche narratives for you guys to keep close watch on in terms of positioning into tomorrow if you want to play the niche narrative trades depending on the candidates, right? In my humble opinion, I still think the best trade in the entire market right now is big tech, but if ever we're going for the thematic trades, here's a few of the ideas that are going to be closely watched. So in the event of a Trump victory, guys, crypto is most likely going to benefit to the upside. That is just because he's been the most vocal candidate about the matter. I've said this once and I'll say it again, guys. The Democrats are not necessarily bad for crypto. I'll remind you, the entire rally that we've had throughout this entire year has been under the Biden administration. So crypto doesn't really care who's in control. It's just that in the event that Trump potentially wins the election, well, you might be able to see a surge in crypto a lot faster than if Kamala Harris wins the election on her own side. Now, financials as well, guys, because Trump is pushing for lower corporate taxes. This usually goes very, very well for financial companies, especially small and medium financial companies. Think KRE. So KRE could possibly be a very interesting trade in the event of a Trump presidency. You may be able to see some very decent follow through on your small and medium regional banks. Moving on forward, guys, the next thematic trade for the Trump camp would be oil, of course, as his slogan always says, drill baby drill. He's going for energy independence, something that he was moving very, very vehemently for in his first term from 2016 to 2020. So these 3 trades are, in my opinion, probably going to be the main winners in the event of a Trump presidency. Now, in terms of a Harris presidency, we also have some very interesting trades here. Number 1 is the China trade. Now, I'll remind you, China trade has been fairly muted as of recently. We've seen it in Baidu. Baidu basically gave back their entire rally. You can go through a lot of these, right? Alibaba as well had a huge rally after the stimulus news, gave a lot of it back, and now is fairly muted because of the fact that investors do not know who's going to win the presidential election. And of course, Trump talking about, starting negotiations out with 20% tariffs obviously is hurting that trade, which is why I say in the event we get a Kamala Harris presidency, the China trade does have a good chance of coming back alive a little bit. Now, number 2 is obviously going to be renewable energy. We know that the Democrats' mandate over the last 4 years has been pushing for the Green New Deal or a lot of heavy infrastructure projects in terms of either solar, wind, or any type of renewable energy source. So in my opinion, renewable energies should be having a good time in the event that Kamala Harris does win the election. Think of either EV stocks or possible renewable energy sources such as solar, wind, and things like that, right? A lot of the hot companies as of recently, like Constellation Energy, some of the ones that are doing nuclear or electricity generation, those two could have a decent little leg to the upside. And number 3, of course, has to be healthcare. So we know the Democrats have put a lot of emphasis on increasing Medicare, Medicaid benefits, which will translate into very nice increases in possible insurance providers for the healthcare sector. The favorite company of mine, which is UNH, they are the market leader in what they do. They bring in the most amount of money and they have the most commanding market share. Funny enough, they are also lining up for one of my favorite trades, which is the monthly breakout, retest, and possibly run. So in the event that we have a Kamala Harris presidency, the healthcare sector, most notably the insurance portion of the healthcare sector, could benefit tremendously from the acceleration of policies which would seek to boost overall Medicare and Medicaid coverage across the US and kind of boost benefits therein as well, right? So we know that the government heavily subsidizes these plans, so that is big money for companies like UNH. So those are just a few of the thematic trades, guys. I didn't put these in any order. Just because Trump is first doesn't necessarily mean that I have a penchant for Trump. Because Harris is second doesn't necessarily mean that I don't like Kamala Harris, guys. I'm from Canada. I have no skin in the game at all, and you guys know me best. I usually don't get political at all on the channel. We're just here to trade and make money, right? Regardless of what happens, we follow the money, we follow the narrative, and that's all we do, guys, right? Don't ever let your political penchants or emotions come into trading, right? We're just here to make money. We're not here to get it political on the channel at all. We just have to follow the money regardless of what happens thereafter, right? So that's pretty much everything for the thematic trades, moving into both candidates. So now let's get into some juicy earnings. And we're going to start off with the only one that we have today, which is going to be SMCI. So SMCI, unfortunately, dropping another 15% in the after hours. Company, unfortunately, cannot catch a break. The news broke out back here that they had their auditor had dropped them. Ernst & Young, a very famous worldwide accounting firm, had dropped them for auditing their, the 10K filings, essentially, that we've been missing for the last 2 months at this point, right? So the company has obviously been bogged down by a bunch of negative headlines over the last 2-3 months at this point in time. So we were very curious to see the management's, what is management doing to remedy the situation both in the numbers that they provided today, but also in the earnings call. So we did receive a few very noteworthy pieces of information today that we're going to share with you guys together. And then I'll give you my thoughts on the matter. Once again, guys, it's very easy to count this company down and out and just not cover it at all. But we want to be covering this in the most objective fashion possible. A lot of people are saying the company is a fraud, the company is a scam. Well, we're here to determine as traders whether or not those allegations hold substantial weight, if the company can remedy them with quick action. And number 3, is there any potential to make any trades down here, even though it is a highly risky proposition, right? It's all about evaluating the risk to reward profile of the company. So that is what I hope to do right now with you guys together. So let's move into the article, shall we? Supermicro shares plunged 17% after company says there is no timetable for the annual results, and they issue weak guidance. Now, I listened to the earnings call as a whole, guys, roughly about 45 minutes to an hour, to be able to get a sense of what management was saying and the direction that they want to take the company in. So let's move into the article, and then we'll go through some of the numbers, right? In terms of the actual numbers, guys, well, you'll see that it's a fairly mixed batch. They did miss on the current numbers, and they also gave somewhat weak guidance. So it was a triple miss by SMCI. However, in an objective fashion, the numbers were actually good. They missed on the estimates, but the numbers that they put out are actually quite good in relation to the company's current share price. Now let's move into it. The embattled server maker that's late in releasing annual financials and at risk of being delisted by the NASDAQ, starting off very savage, right? Reported unaudited first quarter results on Tuesday. Very important, unaudited. This is the company's internal numbers. The stock dropped 12% in extended trading after the company's revenue trailed estimates. Guidance came in weaker than expected, and Supermicro said it doesn't know when it will file the annual results for the latest fiscal year. Not too good, is it, right? Let's move in. Supermicro faces potential delisting from the NASDAQ if it doesn't file an annual report with the SEC by mid-November. Now, in the call, they did say that they were asking and requesting formally for an extension, and they could be granted an extension. Usually those extensions can last up to 180 days at the maximum. So they're working on it. We are working with urgency to become current again with our financial reporting, said CEO Charles Liang on the call. Supermicro said it generated net sales of between 5.9 and 6 billion. That was under the analyst estimates of 6.45, so coming in slightly about 7-8% under the estimate, but the revenue number is still up 181% on an annual basis. I'll remind you, the growth has never been a concern for SMCI. They have been an absolute growth machine. The issue with SMCI has been do their numbers actually hold the weight, right? Are their numbers real? As you can see, growth is not a problem for them. They're growing EPS in a fantastic fashion. They're growing revenue in a fantastic fashion, but the company has had so many criticisms, right? Accounting malpractice, shipment malpractice as well. The company's being accused of shipping its server racks essentially to companies and nations, most notably China, that are not allowed to receive those products. You guys know that there's a export ban on this type of technology, several types of technologies related to semiconductors towards China and specific Chinese companies. And SMCI has been accused of circumventing those regulations and shipping them anyways. So it goes much above the current, just negative view of their non-reporting from their financial statements, right? Adjusted net income for the quarter was 75 to 76 cents a share, which was in line with the expectations, but not above. It was actually slightly below. So it was a double miss. Miss on the revenue, miss on the EPS, but the numbers taking objectively are actually quite decent. Now, moving on forward, the forecast for the December quarter was also below the estimates. Triple miss, missed on guidance. The revenue will be between 5.5 and 6.1 billion, trailing the 6.86 billion average estimate. So that is a miss by roughly over 12%, guys. 12 to 15% miss right there, depending where you take the midpoint on this one. EPS will be 56 to 65 cents. Analysts were looking for EPS of 83 cents. So a big miss there by about, let's call it 20, 30% on EPS for next quarter. So definitely, the numbers in itself are enough to drop the stock just on earnings, let alone all the allegations about financial accounting malpractice, right? Now, SMCI said on Tuesday that the board of directors had commissioned a special committee to look into Ernst & Young's concerns in a 3-month investigation. This is a external investigation, right? The committee found there was no evidence of fraud or misconduct from management, the company said. The committee is recommending a series of remedial measures for the company to strengthen its internal governance and oversight functions. And the committee expects to deliver the full report on the completed work this week or next. So this is an external committee appointed by the board of directors that has nothing to do, the external committee has nothing to do with SMCI. They investigated the reason why Ernst & Young dropped the company as from their auditing role, essentially. And they said that there was no evidence of fraud or misconduct. So at least that's a bullish point for the company in that aspect. Now, that is pretty much where the bullishness stops, right? As you can see, in terms of their financial reporting, guys, usually we get an earnings presentation, we get more of a press release, we get an ad, we get several other reports, right? We have nothing this time around. We only have the earnings webcast, and we only have a glimpse of the Q1 2025 report, which doesn't go into, we don't even have any financial statements right here. We just have to take it for granted that the company says the gross margin is approximately 13.3%. We already went over the guidance numbers. They say those as well. Gross margin of about 13.3% is not the worst, all things considered, guys. I think I actually closed the tab here. Yeah, I did, unfortunately, guys. I closed the tab. Let me just try to find it real quick. Do we have it right here? I think we do. This is SMCI's results from Q4 of last quarter, just to show you guys the gross margin rates, right? In terms of how it compares quarter over quarter. So revenue right now at about 5.6 billion is the best quarterly revenue that the company has ever had. So that is something decent. And now we have, in terms of gross margin, they were down last quarter, now re-accelerating towards 13.3, which is good. But obviously, guys, we have no other financial statements to kind of support these claims, right? So we have to still take them with a little grain of salt, even though the external auditing committee said that there was no financial malpractice that they could find as a whole, right? So we have to take everything with a grain of salt, but as we know, guys, the company is doing several things right. They have huge demand. Now, a big portion on the call, right, was whether or not these current allegations are hindering their demand. Are they losing clients? And especially, are they losing NVIDIA as a client? That was the main focus. A couple of analysts asked for this. And what management said is that there is no significant reduction in demand due to the regulatory concerns or the filing delays. And when asked specifically about the relationship with NVIDIA, the CEO himself said the relationship with NVIDIA is still strong, and NVIDIA will still be ordering these server racks for their new Blackwell products. Now, They also requested the filing extension with the NASDAQ, which was what we said. And the CFO also said on the call that there's no concerns to access the capital markets for either a debt or equity raise. The company has raised equity twice over the course of this year. They don't really need cash, but they have been spending a lot on capital expenditures to build new factories as a whole. If you can see right here, I think the slide was over here. So they're building a ton of new factories in multiple locations across the world because they have very, very, very high demand right now for these server racks. So the company is not at a loss for demand. Also on their balance sheet, they do have a decent amount of cash. So they did raise some debt, but they have a lot of cash to kind of service that debt in the event that they need to pay that down if creditors start claiming the debt early because that they're missing filing requirements, right? The CFO was asked for this. They said, are there any concerns from the banks that issue you guys the debt? Are there any concerns that they can call back the debt early? And the CFO reiterated on the call that his relationship with the banks was fairly good and that so far there was no signal or indication that the banks were going to call forward that debt early. So a lot of the concerns have been abated, but once again, we have to take management's word for it that all of these things that they're saying are true. But at least there is a slight sign of relief after being left in the dark now for a whole quarter. Now we have a lot more information on the matter. One thing is for sure, though, the company does control 70 to 80% of the liquid cooling market share, right? So they were doing air cooling before. Recently, this past year, they've pivoted to liquid cooling, which requires a lot more capital expenditure to reorganize the factories for production of liquid cooling as opposed to air cooling solutions for the server racks. So they do still have a commanding market share of the liquid cooling market, and supposedly they are not dropping any clients because of the regulatory concerns or the filing delays. So now let's get into the numbers, guys. The revenue numbers are very good, 20.5. If all of this is not an issue, the revenue is growing at 20.5% per year, which is good. Their EPS is growing at 34% per year, which is also good. However, the company does not have very wide profit margins. Now, this is a problem for two reasons, right? Number one, it opens the door to competition. If Dell, IBM, or maybe even NVIDIA themselves get into Dell and IBM are already in it, but if competition increases and it drives the price of these server racks down, well, obviously a company that already has somewhat thin margins is going to have to reduce their prices. It's very easy to charge the market a high price when the demand is super, super, super high. But coming into next year, guys, when there's more competition, more competing products, and maybe less demand as the ramp from infrastructure kind of reaches a peak level, well, then the company may be running out of pricing power, and that is when these margins start to be a little bit concerning. Now, moving into the valuation for 2025 at $24, the price in the after hours right now, the PE ratio on a forward basis is a cool 7.2. Very, very cheap, but obviously it's cheap for a reason, right? Because the company is somewhat deemed uninvestable right now until they prove to us that they have a filing extension with the NASDAQ and that they're not going to be delisted, right? And also at $24, the PEG ratio, you divide the PE by the EPS growth rate and you get a PEG ratio of 0.21. This is excessively cheap, guys. This is like dirt cheap, right? Even the price to sales, guys, the company is making, next year they'll be making supposedly $27 billion in revenue, and the market cap is only 16 right now. So it's trading at a price to sales of 0.6. By all metrics, guys, this company is an absolute steal right now, but as I said, it is a steal for a reason. So where do I stand on the company, guys? Well, obviously, there is there's two arguments to this. Number one is just stay away. There's too many concerns, and you're basically throwing your money in the fire pit if you choose to invest in this one down here. But there's another argument for people who like this type of trade in terms of high risk to reward, right? Now, the way that I'll be playing this, because I do think, guys, that there is a trade here, usually at the depths of brand perception and market sentiment of a company, and a company whose numbers are significantly outperforming the current valuation, right? I mean, their numbers could be off, guys, by 20%. But even if their numbers are off by 20%, even if their numbers are off by 50%, the company would still be extremely cheap, right? So I'm giving them that margin of error. But the way that I want to play this, guys, is with options. And it's not the way you think. It's not shorting this company with puts into the ground. It's not buying long calls to the moon and going full YOLO on it. No, 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 no. You guys know me. I like to sell options. And selling options on SMCI amidst this uncertainty, amidst this volatility, could be a very attractive proposition if you can stomach the amount of risk. For myself personally, I will be doing it with only 100 shares. One contract, that is how much I'm willing to lose. It's going to be roughly about $2,000 in exposure. I am willing to lose that money, guys. But all I'm going to be doing right now is essentially playing the casino with SMCI, right? I think that the reward right now outweighs the risk. There is a lot of risk, but there can be substantial reward if they get an extension for their filing with the NASDAQ, and the NASDAQ confirms that there's no risk of delisting the company, and also other companies such as NVIDIA and the companies that are taking on SMCI's products, if they reiterate that yes, indeed, they are still customers of the company, which at the current time they still are, right? So there is a reward portion of this trade, right? But it all depends whether or not you're willing to risk the capital. I would never advise anybody to follow me into a trade like this. But the way I'm thinking of playing it, guys, is I'm going to try to make this $2,000 as free as possible, as quick as possible. So here we have the options chain. Obviously, there's a lot of remaining volatility from the earnings in here. But if you've been following this options chain fairly closely, you'll notice that when you're about 10% away from the current market, usually you can find about $1.50 to $2 in premium. So all I'm going to be looking to do, guys, over the next few weeks is SMCI right now is down to 23.61. I'll be looking as of tomorrow to write the $20 strike for Friday. I'll probably be able to get close to $2 for them, right? If I get assigned at 20, it's very easy for me to just go around the very following week and write calls. I mean, you can't see the 20s right now, but let's say we're at 27. Let's say 20s are at the money or slightly under, right? Look at these call premiums, right? They should be also around $2 a pop for a week of trading, right? And obviously, if the stock starts tanking, your covered calls get worthless quite fast, and you just trail the stock to the downside. You close the 20s, you write the 18s if it's at 16, right? You're kind of trying to trail it down as it moves down. So I do think, guys, that maybe after roughly 4 or 5 weeks of trying an aggressive wheel strategy on this one, we could literally make half of the position free, just collecting the premium on it and reducing our average cost, right? So that's going to be a way that I'm going to try to play SMCI. But as I said, guys, an extremely risky way of doing it. I would not be a fan of loading up a lot of shares down here and going for the moonshot, loading up call options and going for the moonshot. You can if you want to, but just understand, guys, there is a real risk of delisting right here. There is a real risk that the company did commit financial fraud in their accounting statements over the last 2-3 years. So we have to understand that risk. So in my opinion, this is one that it's a pure lottery. Only risk, and this is not financial advice, but if you are going to play it for XYZ reason, not because I said to, right? If you are going to play it, only risk what you're willing to lose. This is what I do for every single one of these slightly lottery style, gambling style trades. I'm not opposed to doing them, provided I'm getting very attractive premium to do it. But if you're looking to play the call side or the put side, guys, just only risk money that you're willing to lose, right? Sounds very logical, but sometimes people get carried away. So just don't get extra carried away and don't get too greedy on this one, right? So moving forward, this one definitely not a long-term investment for me at all. I would never consider putting it into the portfolio, not just because of the allegations, right? But just because I don't think their product has a competitive advantage. I think that they have a market lead right now, but can Dell, IBM, and other server rack manufacturers catch up to them and bring down prices? And, it's basically going to be a race to zero in terms of pricing power. I do think that's the case. I don't think the company has a long-term competitive advantage edge. And you guys know me, in the long term, I only invest in companies that have huge competitive advantages, a commanding share of their industry, and that are very difficult to replicate. Companies like MasterCard or Microsoft, things like that, right? So that's pretty much everything for SMCI. Spend a little bit more time on it because I know a lot of you guys are going to be curious. That's just my thoughts on the matter and how I'm thinking to play it myself. Now, moving into the SPY, so technical analysis for this one, guys. So we're not doing too bad, but obviously, guys, the results of the election, I mean, you saw the charts, right? Usually we're up after the election, but it could be a very volatile event tomorrow. That being said, we are still in a daily downtrend right now. We have collapsed below the rising wedge, and we are still looking for the weekly higher low for possible further trend continuation. Now, the weekly candle is not closed just yet, but you can see that we've been really trying our best to hold the weekly 12 EMAs. So the bulls have one job to do, very simply, in tomorrow's session or into the rest of the week. We need to start recapturing more and more and more of this daily move down. The bounce today was very, very good, right? You can see right here, We've now recaptured about 61.8, almost 61.8% of the move. Any move higher will set the bulls up very nicely to be able to create enough space to reset into the daily uptrend. So that's what we're going to be looking for specifically, guys, in terms of the trend recapture, right? If the markets fall apart tomorrow, and let's not forget Thursday as well with Jerome Powell, right? If the markets do not agree with the election results for XYZ reason, or if there's a contested election, or if Jerome Powell is just not nice to us at all, well, we are still in the context of a daily downtrend and always looking out for a lower high, right? So in that event, we're just going to continue the daily downtrend and continue weekly consolidation, at which point I will refer you to the below support area, which is 565 down to about 559. Crucial to see how the bulls react to this one. But as of right now, we do still have a ton of space on the weekly, guys. Anything above 540, looking for a weekly higher low for further trend continuation. So we'll keep our eyes peeled, guys. Number 2, QQQ. So QQQ, same analysis, right? We know that we lost the daily uptrend. We got the flush, and now the bears are trying to use the backtest of this rising wedge channel, the lower end of this channel, right? Trying to use it as resistance and go for the absolute flush into the further daily downtrend. So in the event that tomorrow's bullish and we recapture even more of this move, we'll pretty much undo all of the damage, and you'll look really good on your weekly, guys, for the setting up of the weekly higher lows for possible further trend continuation as a whole, right? It'll be a fully engulfing move at that point, and the bulls will have tons of space to reclaim the daily uptrend and make a march towards the all-time highs. But if tomorrow is red and Thursday is red as well, you guys know the drill. We're going to react perfectly from this level, use it as resistance, and move into tomorrow. So the technical analysis really doesn't matter at this point because there's so many external factors at play, the election and Jerome Powell, right? So we have to keep in mind that, and in the event that we break these key levels, we need to know which direction are we setting up for continuation. A full engulfing move will set you up for upside continuation. A engulfing move to the downside and flush of last Thursday's low, obviously you guys must understand, daily downtrend will be underway, and the bears will continue a little bit more of a slide in search of setting up the weekly higher lows, anything above 449, looking for those weekly higher lows. And I think, the bulls have a good chance of playing some good defense here, 480 to 475. Now, moving into financials. So financials up about 0.93% today, looking good. They had the daily downtrend underway. Now, once again, it's up to the bulls, guys. Give me a more decent sized bounce or an engulfing move, and you set up the bulls to recapture the daily uptrend. What are we looking for on the weekly? Well, on the weekly, we've always been looking for a weekly higher low for further trend continuation. Never lost the weekly uptrend ever, guys. So at this point, still looking for that weekly higher low for further trend continuation, reacting nicely here, 45.90, which was the area of confluence. As you see, we came down, tapped it, almost tapped it, and now we're looking to move a little bit higher. In the event we roll over, we'll just understand we're still looking for that 45.90 reaction zone. Into healthcare right now. So healthcare has been one of the sectors that's been absolutely crushed in the last 2 months of trading. It led the rally from the tech to value rotation in the month of July, led the rally, and now has led to the downside. So weekly downtrend is underway right now. I'll remind you, what do we need to see, guys? Need to see a reversal of the daily time frame, and we're currently trying to do it right now. As you can see, higher low is set. If we break the high of last Friday's trade, 148.38, you actually get your first daily uptrend. Then you need to follow this daily uptrend, and how long does it last, and how much of this weekly downswing can we recapture? If we can recapture at least 61% of this move, aka if we can rally up to 151, the bulls will create enough space on the weekly to either fully V-shape engulf or do the two-step weekly recovery process. So the bulls still with a lot of work ahead of them, but step number 1 is to break this daily, give us the daily uptrend so we can get some follow through. If not, if we continue rolling over, we are in the last line of defense right now, guys. 148 down to about 145, the cannot lose area of support. On the monthly, though, still with a lot of space, anything above 139, looking for the monthly higher low for further trend continuation. So I do say, guys, it's do or die for the bulls right now. Can they complete it? Can they not? We will keep a very close look, but you guys know my favorite trade in this sector is UNH. Moving on to semiconductors, and give me a very brief second. So the semiconductor trade coming alive today, 1.65% to the upside, but still not enough to counterbalance the daily downtrend that we have right now. We know that the bulls lost the daily uptrend, set the daily downtrend, and now we might just be looking for a lower high. So we do have overhead resistance right now, 260 down to about 251. So in the event we have an adverse reaction to the results of the election tomorrow, expect some further downside continuation. Daily downtrend will continue, and then we look to our support area, 238 down to about 231, to act as a big area for defense for the bulls. The whole time that we've been in this daily consolidation and correction mode, we need to understand who controls the higher time frames, and that is the bulls, still in a very nice weekly uptrend, looking for the weekly higher lows for further trend continuation. And I do think this is where they're going to get stopped, guys. 238 down to about 230 seems to be the last line of defense for the bulls. I think they have a really good chance of defending this zone before putting in an extra leg. That's to say, if they don't do it right now and start reversing the daily. So the favorite way, even though the index looks very choppy, guys, we have to go for the names that have been outperforming recently, the names that don't have any concerns in them whatsoever, because we know, companies like Micron, other companies, you know what I mean? Like, there's so many semiconductors, and a lot of them have their own little concerns here and there, right? Micron has little concerns, Intel has big concerns here and there, just a lot of other different chip manufacturers. ASML has concerns right now too. You go for the ones that do not have any concerns whatsoever, and those are your lead bulls. TSMC, number one. Beautiful uptrend, come down here, I'll be writing short puts. And NVIDIA is company number 2, right? These are the 2 strongest names in the entire sector right now. AVGO as well is very strong, but I think NVIDIA and TSM just have such a almost monopoly on what they do in their respective segments, right? So NVIDIA as well, if NVIDIA has a bit of a drop, I'll be looking to play some short puts there as well. So that's how I'm looking to play SMH, is I'm looking to play my favorite companies with short puts significantly under the market, rather than trying to play the index as a whole, or rather than trying to go for plays that are lagging behind, like an AMD, like a Micron, like it's not catching up to my quick speech, right? Like a Qualcomm, right? All these names are kind of just lagging behind. So rather than playing the laggards, I'm going to continue playing the sector leaders. Now, moving into the next one, which is going to be the IWM. Russell coming alive today. Finally, a very nice day for the Russell. Still very choppy price action though. Did not lose the lows. The bulls are now going for the new daily uptrend and trying to tackle this area of resistance once again, guys. 225 up to about 230. If the markets appreciate the results of the election tomorrow, there's no contested election, and Jerome Powell is nice to us, guys, says that the economy is good and everything like that, and we get a green light into November and December, I do think that this one has a good chance of breaking through this, right? Just because we're going to remove so many uncertainty catalysts. And what the Russell does not like is uncertainty catalysts, either from the economy or from an interest rate standpoint. And if you remove those uncertainty catalysts, you do have a good chance of breaking through. So we'll keep a close eye on the Russell right now. Still very tight price action. But if you start breaking and closing a weekly, guy, if we close this weekly above 225 with a hard weekly close in here, guys, I would be looking for some possible follow through, and then we may open up a trade, which is the breakout, retest, and run. So in the event we close the week up here, I won't be buying the breakout next week. No. I'll wait for the breakout, the retest, and possibly play the retest for some continuation follow through, the trend continuation trade, in other words. Moving into the Dow Jones. Dow Jones also was up today. So the Dow Jones up about 1%, trying to buck the daily downtrend right now. So you know that the Dow Jones has been in a daily downtrend. Lows right there. So now what the bulls are trying to do, guys, is we're trying to put in an engulfing move. We're trying to recapture the 42,500 level, which is these guys right there. We will see if they can do it tomorrow. If we get the V-shaped recovery, the bulls will create a lot of space above 41.5 to reset the daily higher lows. And I'll remind you, what is the context of this daily downtrend? The weekly, guys. The weekly holds all the secret for the Dow Jones, right? Now, very nice weekly uptrend. We never lost the weekly uptrend. So you knew that this daily downtrend consolidation was all the time just looking for a weekly higher low. Anything above 40,000 was for the weekly higher low for further trend continuation. If the markets come undone and unravel over the next few days, we have a nice area down here, 41.3 down to about 41,000. Still a lot of space. That would be big prior resistance. Current support, the 26 EMAs there as well. And you can see they haven't really lost a 26 EMA ever since the rally started last November. So in the event the markets do really fall off tomorrow and into Thursday, into Friday as well, into next week, I expect this to be the last line of defense for the bulls before they start putting in a really big fight, right? Now, moving into Bitcoin. So Bitcoin still doing the same thing. We covered this one yesterday, but I'll cover it again just because it's set up, guys, for either direction right now, right? In the event that Trump clinches victory or something like that, well, you do have a nice potential continuation on the daily uptrend. But similarly, in the event that Kamala Harris wins, it's not that the Democrats don't appreciate or don't endorse crypto. It's the fact that Trump has been a lot more vocal about it, right? So even though I do believe that Bitcoin over the next 3 to 6 months, Bitcoin will not care who is the president between you and I, right? But in the short term, the next 2-3 days, you guys know how volatile the crypto markets can get. There's also a very good case here for the bearish rollover, right? We have not closed the weekly candle above the 72,000 mark at all, right? Even though the weekly uptrend is looking good, we do have a lot of space for some weekly consolidation. Anything above 59,000 could open up the doors for some extended weekly consolidation. And then thereafter, once the dust settles, we can go on for another weekly leg higher. So Bitcoin is an entire toss-up. I will remind you, the one way that I'm playing Bitcoin for this purpose is using BITX, and I'm writing puts significantly under the market to benefit from that volatility. And in the event Bitcoin comes down hard, I have no problem buying the shares or buying Bitcoin or BITX. You know, BITX, the levels that I'm writing would be buying Bitcoin down here 63 to 60K. I would love buying Bitcoin down here because it doesn't change. The results of the election does not change my bullish thesis for Bitcoin for the next 6 to 12 months. So hopefully that makes sense. Now moving on to big tech, let's see how they're standing right now. So big tech up about 0.65%. Not too bad of a day for Apple as a whole. Big tech, I meant to say Apple. So Apple, daily downtrend still confirmed right now, right? The bulls are trying to go for the daily bounce. We can see that they're trying to recapture the hourly time frame right there. They haven't quite got it in the bag just yet. You can argue that they have, but it's very tight. We need a break of 224. Give me a break of 224. You have a clearly defined hourly uptrend. The only problem is that the resistance line is so close, 230 down to 225. So could we end up in a situation where we have an unfavorable election result in terms of a contested election, or we don't get the results right away, more market volatility? You could just see us reject at this resistance and push one move lower into the whole 220 to 216, which is downside resistance or downside support rather, excuse me. Now, in terms of the weekly, we lost the weekly uptrend, right? So first things first, the bulls need to get the daily uptrend back, and only then can we talk about recapturing the weekly in a V shape or in the two-step process. So Apple's not looking too bad right now, but because of how high the valuation is for the company and because of how low the revenue growth run rate is, I'm not a fan of buying Apple up here. But in the event we get a broad market sell-off for XYZ reason, guys, in the next 1, 2, 3, 5 weeks worth of time, and we find Apple for either a company specific reason or an overall market related reason, we find Apple 200 down to 210 or 210 down to 200 rather, that's where I'm going to be personally bidding Apple. Up here, the risk reward to me is not that favorable, and that's just my opinion. Moving on to AMD, but I am still a long-term Apple shareholder, guys. I still have all my Apple shares. Haven't really sold at all. Still believe in the company long-term, but it's just for short-term swing trades up here. The risk reward is not the most favorable in my opinion. Now moving on to AMD. So AMD trying to get a bounce underway, but we've been talking about this, guys, even though we've got the flush down into big support, which is 141 to 125, right? Pretty decent support level with the prior highs right there. Pretty decent support. Even though we got the flush, we know that the bulls are not putting together a rally until we recapture the hourly uptrend. So now we have the higher lows at the end of the day today. We need to break 143. If we can break 143, the hourly uptrend is recaptured. We recapture the 12 EMA, which is this line, yellow line right there. And then we can talk about the size of the daily bounce. But until you give me a confirmed hourly uptrend, this daily move down is not finished, right? So once we get the hourly uptrend, then we measure the size of the daily bounce. And depending on the size of that daily bounce, if we can get up at least to 50%, which is roughly the lower part of this resistance, right? 154. If you can get all the way up here, you get a lot of space off the lows. You give the bulls the space to reset this into the daily uptrend. And only then can we talk about a weekly push higher. So the bulls have a lot of steps ahead of them, right? First, they haven't even caught the hourly uptrend just yet. So that's step number 1. Then step number 2 is measuring the size of the bounce. Step number 3 is recapturing the daily uptrend. Step number 4 is measuring the size of the bounce on the weekly, because at this point in time, it's going to be so tough for the weekly bulls to V-shape an 80% retracement with resistance above, most likely going to go for the two-step process, right? So a lot of work for AMD. I'm not opposed to selling puts in the lower 130 to mid 125 region, but that's as far as I would go with this stock in terms of short-term positioning, guys. Even for calls from here, right? We don't have any uptrends, right? The only time you can do short-term calls is when you get the break of the hourly. When we get the hourly uptrend, you can get the calls right here. Not financial advice, just the way I trade, right? I wait for the hourly uptrend confirmation. Once you get the higher high confirmation, easy for us to set a stop loss there and set our targets all the way up here, right? So that's just how I do it. I wait for confirmation, guys, because without confirmation, we can just get rolled over, and that's just the fact of the matter, right? Moving on to Amazon. So not saying that with confirmation you can't get rolled over, but at least, you have a more defined level and you've waited. Now, moving on to Amazon, 1.9%, guys. Amazon coming very close up into the $200 range, looking quite good. We were saying that Amazon created a lot of space with their earnings, right? And any declines after earnings, we're looking for a daily higher low for further trend continuation. Now, the higher low has been set. It was 185.35. They have now reset, right? Take a look at this. This is why the hourly matters so much. Hourly consolidation, and now they've recaptured the hourly uptrend. So now the daily higher lows are set. So suffice to say that if we freeze and do not cross 200 and then break down below this, unfortunately, you will have a new daily downtrend. You'll be into short form weekly consolidation as well. And at that point, anything above these guys right here, this whole range, right? 184, 185, you're going to be looking for a weekly higher low for possible further trend continuation. That is if they don't just completely blast through these all-time highs over the course of this week. So Amazon, no red flags, looking very healthy. But in the event we come back down to the lower 190s to 188, I'll be writing some short puts and I will be going for some leap call options because I do think that, through 2025, my Amazon end of year price target for 2025 is sitting about between 240 and 250. So even at 200, there's some decent upside to be had in this stock. In my humble opinion, not financial advice, just the way I see things, of course. Moving into Google right now, Google up about 0.43%. Google still kind of lagging behind right now. Google still does have a commanding lead in terms of the daily uptrend right now. Looking for the daily higher lows. At this point, anything above 163. Looking for the daily higher low for further trend continuation. We're finding a base of support. Where are we finding it? Where we had the previous resistance, right? Going to be tough for the bears to just flush this entire move down. We'll see if they do it, but Google is not looking too bad. On the weekly though, the weekly also, it is a weekly uptrend right now, but we could not close this weekly candle. So it's looking somewhat ugly. Let me just move this over and delete the expected move so it's more clear, right? It's not looking the prettiest on Google, but there is no red flags. It is a confirmed weekly uptrend, and higher lows are anything pretty much above 160. So the bulls have tons of space to pull back, even for weekly consolidation. And I will be a buyer in the event that happens, guys. In the event we come back down 167, 165, I will be adding calls to this trade. I will also be writing, I am currently writing aggressive short puts on Google. You can see this one right here, right? We got the 167.5s for the Friday session, and I will continue to write the 167.5s or the 165s for weeks to come, however long we stay in this lowered region right there. Moving on to Meta right now. Meta coming alive as well, 2% to the upside. Doesn't look like much though after the crush that they've had, right? So the daily is very, very messy right now. Daily downtrend, engulfing move, gave it all back after earnings. So now there's no trend whatsoever on the daily at least. The bulls are seeking to reset into a daily uptrend. But the time frame that makes the most sense for me on Meta, guys, is the weekly, right? Look at this beautiful job that the bulls have been doing, playing defense right here, right? Beautiful weekly uptrend right now, looking for the weekly higher low. Anything above 496, looking for a weekly higher low for further trend continuation. As of right now, they're using the 12 EMA perfectly to play defense. In the event we flush through because the markets have a sell-off tomorrow and the day after, we'll be looking for 540, right? 540, 530, retest of the prior all-time highs. Could be a very juicy breakout retest at run trade. Not too sure if we're going to get there. All I'm saying is if we do get there, we're not that far away right now. We're about roughly 5% away, right? If we do get there, that will be a very attractive trade, and I will be taking this one myself for further upside continuation. Moving into Microsoft. Microsoft up about 0.73%. Not the best, right? Microsoft is really struggling closing above the 200 EMA. They've tried it now twice where we beautifully pushed above and retraced all below right now. So Microsoft is still somewhat weak after their earnings, somewhat muted in terms of the price action too. So right now we're really just caught between two levels, right? If you get a break above 415, break and close, new daily uptrend is set, and then we look to see, well, can the bulls get out of this weekly tightening range and start attacking the above resistance level again? Because the weekly trend has been lost too. And now, in the event we break to the downside, a flush of close below 405 on the daily would be daily downtrend in motion, would unfortunately just be continuation of the weekly downtrend. At that point in time, we'd be looking to 405 down to 390 for support. Now, a few people have asked me, Will, you don't mention this, but it's fairly obvious, right? Yes, guys, there is indeed a big head and shoulders. The shoulder's been forming, right? Well, first it was this one right here. It didn't break. Then you could say, well, it's an extended one, right? With two moves. This one didn't break either. And now we're in shoulder number 3. This on itself is a mini head and shoulders, right? But it's Microsoft. In my opinion, this pattern will not break down below this big level unless we get a very big consolidation on the SPY and QQQ. It is extremely rare, especially with the earnings that Microsoft had, guys. Microsoft is a fantastic company. If you want Microsoft to break down from the head and shoulders, head to the next zone, which is about 345 up to about 360. If you want Microsoft to be down off the all-time highs, 20 to 25%, there needs to be a good reason. And one of only two things is going to happen. It's either has to come from the company specifically, which is not the case. They had very good earnings, or it has to come from the overall market. So short of a S&P and QQQ 10% plus correction, I would be highly surprised if Microsoft actually follows through with the bearish head and shoulders pattern, right? Which is why they, in my opinion, haven't followed through with it so far. So hopefully that makes sense, guys, right? We kind of have to use our logic. Yes, it is a very big head and shoulders. I realize that. I have eyes too, but we also have to realize the context, right? It is Microsoft. Now, the head and shoulders does have about a 70 to 75% success rate, but it's not 100% success rate. And as I said, I do think that it's highly, highly, highly dependent on the direction of the S&P and the QQQs, right? If the SPY and QQQs are ripping through November and December, guys, do you guys really think Microsoft's going to go for a 10-15% slide just because it's a head and shoulders pattern? Probably not, right? So we'll keep watching it, but as of right now, those are my thoughts on that matter. Moving into Netflix right now. So Netflix up about 1.11%, trying their best. They're trying to do it, guys. If we break above 771, you will have a new daily uptrend confirmed, and you will just have a continuation of this gorgeous weekly uptrend as well. They're trying to set the weekly higher lows by using this whole base of support, right? But it's not clearly defined. This is a very tight range. If we break to the downside, 746, because S&P and QQQ fall apart, it'll be daily downtrend, and we'll be going into weekly further consolidation. As of right now, no clean breaks on either direction, right? So we cannot say the higher lows are set just yet, right? So in the event we fall, still looking for a weekly higher low. At this point, anything above 661, looking for a weekly higher low. Look for confluence down here about 730 to 720. And to the upside, of course, if we get the clean break above, we are heading probably to the $800 psychological level of resistance. Moving on to NVIDIA right now. Very powerful day by NVIDIA, guys. 2.84% to the upside, not looking too bad at all. Now, NVIDIA still in a daily downtrend, looking for the lower high. But now you see, now the bulls are looking to make a move into the highs, right? As you can see, how much of this move have we recaptured by the daily uptrend already? Well, the daily upswing rather. We have recaptured over 618. So it gives the bulls the best chance now at having created a lot of space off these lows and getting the chance to reset either in a V-shaped recovery or the two-step daily uptrend recovery process. Why is this important, guys? Because once we get the confirmed daily uptrend or we get the engulfing move, you can then say that the weekly higher lows are defined and set and possibly looking for a further leg of weekly continuation to the upside leading into the earnings in the next 2 weeks. In the event this pattern falls apart and it is just a lower high into lower low, flushing these lows, there is support below us, 130 to 126. This will only happen if the SPY and the QQQ fall because of overall market concern, right? 130 to 126 is the first line of defense. And if things get really bad, Well, I do think we can maybe revisit the 120 to 116. That would probably be max pain for NVIDIA over the next few weeks prior to earnings. It would be a very fast and very violent move for NVIDIA. You've seen it. They can do it. They have done it before, right? So do not rule any of these circumstances out just yet. So these are the two levels I'll be playing off of. Short-term 130 to 126. And where I really get attracted to build a sizable position in NVIDIA is if we retest 120 to 116 prior to their earnings, because I think earnings will be quite good. Now moving into Tesla. Perfect. So Tesla up about 3.54%. Not looking too bad, right? At one point today, Tesla was up a decent amount more than that, right? They were above 4.5% at one point, 5% at one point today. I saw them at 4.5%. They clipped 5%. So Tesla's still in the context of looking for the daily higher lows for possible second attempt at the 265. Well, depending how you look at it, right? 1, 2, 3, 4, 5, 6, 7th, and maybe 8th attempt at the 265. So it is a very big level, but we knew the bulls are in control. They created so much space after these earnings, and we were looking for the 240, 235 to act as the last line of defense. They played it perfectly, and now we got the daily bounce going. You can see it best, right? How do you guys know that the daily move down is finished? Need to see an hourly uptrend shift. So far, the bulls do have the hourly uptrend in their grasp, right? Low, lower high, low, high, higher low, higher high. The uptrend is now set. So it's up to bulls to protect this. They have the short-term moving averages. If we get continuation, guys, suffice to say that the bulls do have a lot of space here to work with, right? To push the highs. Now, in the event you lose the hourly trend immediately into tomorrow, because one candidate wins over the other, right? Tesla is a very complicated trade in terms of Trump versus Harris, right? Elon himself as a person has been endorsing Donald Trump. So you could assume that in the event of a Trump win, Tesla could benefit from some share appreciation. However, remove Elon Musk from Tesla. Tesla as a company, the nature of the business being an EV manufacturer with a ton of environmental credits, stands to argue that under a Harris presidency, the company could do fantastically as well, benefiting from a lot of that infrastructure money, the environmental credit money, which will keep rolling in, right? So it's very tough. I mean, in my mind, it's kind of like a win-win, right? If Trump wins, it gets associated with Elon, and it's probably bullish for the company in that aspect a little bit, if that makes sense. But if Harris wins, you can make a case for Tesla, the company itself, maybe not so much for Elon in the short term, but the company itself, you can make a bullish case for it, right? So very, very, very peculiar situation that Tesla is in right now. Suffice to say, this one's going to be pretty volatile tomorrow over the course of the day. I'm not playing it myself. Just watch the levels, right? Overhead, big resistance. Right now, we're in between. Very tough to play right here. In between two zones. Resistance up here, support down here. I've always said that if Tesla flushes this in a big way back down here, I'll be playing short puts down here. That's the extent of my willingness to play Tesla in the current market environment. Moving into Palantir lastly. So Palantir, massive day after their earnings yesterday, right? 23.5%. If you didn't see my earnings video yesterday, have a look. It was yesterday in the first part of the video. Spent about 10-15 minutes on the company, doing a deep dive, my expectations on it and whatnot. So Palantir, pushing levels right now. This one's just going to be a classic earnings after the move, right? The bulls have all the space in the world, new all-time highs right now, fractured the psychological level. So the next resistance, guys, you got to go with a bit round numbers, right? 55, 60, things like that. In terms of downside, well, you guys know the most relevant areas recently have been these guys down here. So these guys down here will be acting as short-term support in the event that the bulls give a little bit back, as several names have done so far over the course of the earnings cycle. They give it a little back, looking for the daily higher low. Anything above 41, looking for a daily higher low for possible further trend continuation, right? We will see how much they give back and how, in the event they come all the way back down here, how do we react to this zone, right? And also suffice to say, if we give back a little bit more, lead into the daily downtrend, well, then you know that weekly consolidation is likely underway. But the bulls with so much space right now, I went over it in earnings yesterday, very risky proposition to chase Palantir to the upside right now. If you're in this one, possibly a good idea to maybe take some off the table depending how much you're up. If you have short dated call options as well, possibly good to take some profits. If you have multiple contracts, try to make some free at least and ride the rest for free perhaps. Covered calls on shares is never a bad idea. That's what I'm doing as well specifically, or just keep the shares and ride, guys. It's completely up to you, right? I'm partial to being a little bit more defensive, taking some profits off the table. But if your time horizon is the next 5-10 years, you're probably not worried about the short-term fluctuations in the stock price anyways. So that's my analysis on Palantir right there. Let's jump into a few of the new positions, guys. If you didn't see, I did a full portfolio rundown on Friday. I won't be explaining all of these trades today. I'll just be explaining the ones that we did close today that were fairly profitable for us. So in terms of the ones that we did close, guys, I mean, very simply, right? You saw me take the trades on Palantir and HIMS as of yesterday, right? Those earnings trades both went extremely good. We closed them for pretty much worthless, right? So we closed the HIMS trade. We got them at 15 cents. Closed them for 5 cents. I mean, I could have got a penny on these. I was there at the bid. I tried for 1 cent, 2 cents, 3 cents all day. They didn't fill me, so I just closed them at 5. So decent little win right there, 75%. Easy trade in my opinion. We also closed the Palantir ones. You remember, guys, I was coming to Palantir with 4 contracts, 31.5s, the 33s. We got some decent premium on those. We closed them for pretty much worthless today. So those were easy two standard deviation moves on earnings. Other than that, I haven't added anything today that was noteworthy except for a few positions. CELH, we took 3 23.5 contracts at 9 cents. That is 2 times the expected move away. So we'll be looking forward to see how CLH does tomorrow. But this is a big move, guys. This would be 25% plus away from the current share price. I wouldn't mind picking it up down there. So we'll see how they do with earnings tomorrow before the open. And then I kind of went in solidarity with a few of my Discord members that have positions in CLH and that unfortunately they are down right now. So we're kind of talking in the chat all day about CLH. And obviously you guys know me, I'm very patient, I'm very conservative, but I said, you know what? I have the buying power to do it. I have the capital to do it. So I said, you know what? Let me just join you guys and, you know, in solidarity, we can be bag holders together. And so I wrote the $30 puts super close to the current share price, guys. I don't recommend doing this. This is just kind of like a meme trade more than anything, right, guys? I really don't mind. It's not that much capital for me. I went with the $30 puts just to be able to wheel it somewhat aggressively in the event that I get assigned or something like that. Got $1.32 in premium, so we got well over 4% for the week. Can't be mad at that. We'll see how this one goes tomorrow. So this one, don't pay too much attention to this one. This one is the actual logical and safe earnings trades that I do promote on the channel. Moving on further, we did take some NVO. So NVO, we went with the 95 put for next week. This one was giving us some decent ROI for being 2 expected moves away. The expected move on NVO shares for tomorrow is about 6.5% either direction. So I went about 12.5% away from current share price. And as you can see, it does coincide with a very decent area of support, which is between the $100 and $90 range. So 95 is kind of right smack down there in the middle, kind of in a big support area as well. So we'll see what happens with NVO. I would not mind buying this tremendously good company 35% off the all-time highs. I would not mind being assigned the shares at 95 at all, guys, at all. That's why I'm playing it. At that point in time, they probably, if they head all the way down there, they will most likely be weekly oversold, and they're already daily oversold, so they just be way more daily oversold, right? So that's why I said I wouldn't mind being assigned at 95 by next week if that is the case. And to the flip side, I did play this one in a bullish fashion, going with the same logic, right? We're daily oversold right now. We've come down a ton. Most of the issues that are plaguing NVO right now is not demand for their product. It's supply constraints. They underestimated the sheer amount for the GLP-1 weight loss and diabetes drugs that they do manufacture. And now they have to build factories very, very, very quickly to, get that production up to meet the demand, right? So that's the best problem a company can have, is have too much demand, but then unfortunately it takes a while to build up the production to meet that demand. So that's been the concern for them over the last roughly quarter and a half, but the company's doing fantastic. The financials, the fundamentals of this business are absolutely fantastic. So I give myself a lot of time. Yes, I should have waited for after their earnings, but I told myself, listen, if they poop the bed after earnings and come down all the way here, I'll just throw another contract at this very nice company. But in the event that this is the turnaround quarter, they give good guidance for the quarter, and this is possibly the bottom of the last 3 months and a half worth of downside moves, essentially, right? Because we're looking for the monthly lows at a certain point. Just looking for the monthly higher lows, right? It's going to happen eventually. We've now cooled down the higher time frames on the monthly. We've deeply cooled down the weeklies as well. Your head and shoulders pattern did get the follow through that it required. So in the event that this is actually the bottom into earnings, we get a nice, 6, 7, 8, 9, 10% pop after earnings. I wanted to participate with a little bit of upside. As you can see, only one contract, slightly out of the money, 120s for April. They cost me about 680 bucks. Not too bad. As I said, if we dip down to here, I'll end up with some shares and maybe even throw 1 or 2 more calls at this play. You guys know that I played the bull call debit spreads earlier on, all the way up here for some trend continuation, or it was here rather, and it didn't play out too well, right? So I have a bone to pick with this stock. Trust me, guys, I'm just kidding. I'm not revenge trading at all. It is what it is for this trade. We'll close this one at a loss tomorrow after earnings. Whatever happens, we're already down most of all the money anyways. This is one, I've explained this several times on the channel. Just poor risk management from me. I should have closed the trade right here. I got too stubborn with it. I held it way too long. I told my Discord members to get out of the trade and close here. But if they wanted to take the risk and gamble with me for a, support trade rally and possible bullish sentiment coming back into the stock, that is what I was waiting for, even though it did fracture my levels, lost the daily uptrend, lost the weekly uptrend as well, and there was a risk of fulfilling the Head & Shoulders prophecy, right? I took the risk and I lost all the money on the debit spreads. That's why I keep these contracts small. Very small loss for me, right? Keep in mind, I run like $100,000 of exposure at any given time. So 500 is, a slap on the wrist for me, suffice to say, but very important, guys. This is a testament to respecting the rules of your strategy. This is why I've kept it in the portfolio as a constant reminder, not only for me, but for educational purposes as well. You guys see that usually I'm very diligent on my trade management. When it hits my levels, I hit the stop loss, I get out of the trade. If I lose conviction in the stock as well, I cut the trade. If I find a better trade that can make me more money faster, I will cut the trade. But this one, I have kept it. I told myself I'm keeping it through earnings. Whatever happens, happens with it. So this one will be gone most likely tomorrow, regardless of what happens. But these two, I do have decent confidence in. And as you can see, I've put a lot of time on it for the company to get back in Wall Street's favor and for them to start increasing their guidance because their numbers for 2025 are good. And then we went with the risky gamble, guys. We went with the SMCIs. We went with the stock was trading at 27, guys, 27. I went with the 13 short puts for a wheel strategy, and I got 14 cents for them. I literally got 1% for a 50% possible drop in SMCI. Don't recommend anybody do this, guys. It was very risky coming into earnings with this. It could have dropped 50% if they said that they had some large concerns or the NASDAQ comes out with a headline tomorrow before the open and says that they're delisting. I'm going to lose all my money here, right? So I never recommend doing this. This as well was a meme. I took the... In the Discord, I told everybody, I said, do not follow me. I'm doing this as a meme trade, similar to this one, the CLH kind of meme trade right there. I mean, it's not that meme, right? CLH is a good company. The valuation right now is very cheap. It is undervalued. This is just a very aggressive contract, right? This SMCI right now, into earnings with all the uncertainty, the delisting risk, this is just a gamble at that point. But I got 1% for a 50% possible drawdown. So let's hope the company isn't delisted by tomorrow morning at the open. If not, we'll be able to collect 100% of the profits. And moving forward, I will throw one wheel contract at SMCI on a weekly basis moving forward and seek to farm as much profit as possible from this company before either it goes bankrupt or gets delisted or goes to the moon, right? Because there's always those three scenarios. So we'll see what we get with SMCI. That's everything that I had for you guys today. I still have, for all intents and purposes, very close to full buying power. So if tomorrow we get a bit of a sell-off or rise, there's still tons of opportunities that I'm willing to have in the markets, guys, as a whole. Microsoft, Google, Amazon, tons of them. I have, well over $70,000, $80,000 of buying power right now. I've just been sitting on my hands, having a very good time, closed out some good gains today. I didn't show you guys these gains, right? We had a longer duration wheel trade on, which was this one right here, NVIDIA, 53% win in 3 trading days. We wrote these contracts at $325, closed them at $1.54. So what is that? Like, $170 in 3 days of trading, pulled forward 1.5% weekly ROI, right? We look for 0.5% minimums on these wheel trades per week. This is 3x what we usually look for. So, we've had some very good trades, taking profits. Everything was up today. So just a day of just collecting the gains, collecting the premiums, moving on. Same old, guys. So I've been having a good time, got full buying power regardless of what happens tonight, into tomorrow, into Thursday and Friday. I am ready for these dips if they come. And if they don't come, there's so many companies right now that are still at dipped levels. So many. And I show you guys tons of them on the channel on a regular basis. So if you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these videos every Monday through Friday after the close. If If you have any questions, always feel free to leave them down below in the comment section. You want me to look at a specific stock, second opinion, not financial advice on an options trade, anything you guys want, I'll do my best to help you out down below in the comments. And if you want all of these trades in real time, here's the recap of our trades over the last, well, since I started the Discord. These are on a weekly basis. You can see all the greens are wins, the reds are losses. The wins have outnumbered the losses. The little targets here are assignments, most of which we've got out at a profit so far. So if you want to have access to all these trades in real time, the link to the Discord is down below. It also comes with private market live streams, every single market open, private member videos, all my trade ideas, all of the trade setups, whether they're, wheel trades, calls, shares, leap calls, anything you want, right? And if you want to talk to me every single day, all throughout the day, ask me your questions on your stocks, your options plays, things like that, well, click the link down below to the Discord and it'll give you more information. And hopefully I see you in there soon. And if I don't, guys, I will see you back on this very same channel. Keep trading, keep your heads up, stay confident, stay motivated. Love you guys. Take care. Have fun in tomorrow's session, but don't get too greedy, right? Channel your inner Warren Buffett. Be patient. Let the stocks that you like come to you. Don't chase the market. Take care, guys. I'll see you tomorrow after the close, and peace.